Let's fucking go. Let's have a fantastic week. Let's take a look at these markets. Okay, so here's what we're going to start with. So we're having a good conversation inside of the Discord. If you guys are not already a part of the Taylor's Code, the private Discord, I don't know what else to tell you. But inside is where we got the alpha. So I'm talking to some of the gentlemen over the weekend and explaining what's happening right now with the US dollar and what Trump's trying to do with these tariffs and how they're trying to reverse these trade deficits that we've created with all these nations and why it's important, why it's so important. Why are people talking about the nation going bankrupt and how we're going to fix that? Well, let's talk about that. And then we're going to tie this into the bigger picture in terms of what's happening with markets right now, what our bigger picture goal is in terms of our investments. Because there's got to be a goal. There's got to be a reason we're investing into things, right? There's a reason we're putting fiat into things like crypto, into things like gold, into equities, etc. There's a reason that we're doing that. So you got to have the bigger picture goal in terms of why we're doing that right now, and then when are we going to take profit? When are we going to rotate? What's the plan, right? There's got to be a plan. There's got to be something that we got to do, right? This is why I'm always 10 years ahead. I'm thinking 10 years down the road. I'm not thinking about next week or next month or next year. This is why the local price action in markets doesn't upset me, doesn't make me cry at night. The markets are down. Eggs are $4 a fucking carton. I don't know what to do. No, it doesn't happen to me because I'm thinking 10 years down the road. I don't care about what's happening right now, right? So what is happening 10 years down the road? Well, the US dollar as the world reserve currency is under attack. It is under duress. Okay, now why is it under duress? Let's take a look at a chart. I'm going to show you guys something. So we're talking about this in the Discord and just doing some analysis on it over the weekend. So let me do a little Mr. Producer. We got all them hoes, Mr. Producer. All right, so let me do a little fucking transition here. A bomba clouds. All right, gentlemen, can you see this? Yeah, you should be able to see it. All right. Let's take a look at this. So we were looking at this inside of the Discord over the weekend. I want to touch upon it and explain how the U.S. Treasury and the U.S. government is funded, okay? This is very important for macro, and then we're going to get into charts. So 1, 2, 3, 4, 5 nations before the United States have held world reserve currency status. What does that mean? That currency is used globally for trade, to preserve wealth, to hold their, basically hold their money in. This is the world reserve currency. So first, it was the Portuguese Empire. Okay, this is also why Portugal, Spain, the Netherlands, the Dutch, the French, Great Britain, they had all these colonies across the world. They were big empires. They were doing tons of trade. They were getting rich off of the resources from these other nations, and that's why they got this world reserve currency. So we got to take a look at how these things happen, right? So Portugal maintained that world reserve currency for 80 years. Okay, that was their reign. After they tailed off, that empire started to crumble. It went to Spain. Okay, so they had their build-up period. Then Spain was the world reserve currency for 110 years, from 1530 to 1640. Okay. Next, it was the Dutch. Okay, the Dutch had it for 80 years, from 1640 until 1720. Then we get the French. Okay, France had it for 95 years. They were the world reserve currency, 1720 to 1815. Then Great Britain, which was the most recent empire before the U.S. So they held it for 105 years, 1815 to 1920. Okay, now let's pay attention to this last transition into us. So the British East India Company started to decline. World War I happened, and then the Great Depression took place, and then World War II. That's what caused the decline of Great Britain. But whenever Great Britain was at its peak, the East India Trading Company was the biggest company, the biggest trade company in the world. And the U.S. or the British Empire had influence all across the globe. Okay, so they had that power. Now, what took them out of the power? The lack of industrialization. Their economy declined, and so they lost supremacy in the financial world. Okay, well, they held it for 105 years. So let's take a look at the U.S. now. So the U.S. becomes dominant after World War II. Clearly, they became the world reserve currency in 1920, but after World War II, it was very clear the U.S. empire was the dominant in the world, the dominant empire. 110 years of world reserve status would take us to 2030. That would match the longest any nation has had world reserve currency status with Spain. So even if we just match the longest in history so far, we're only going out to 2030 as the world reserve currency. So we're coming towards the end of our reign if we don't do something different here, okay? This is really important because 10, 15 years from now, we need to know where things are going to be at and why we're making decisions for today and how they're going to affect us from 10 years from now. Well, what's going on with the U.S. right now? We've deindustrialized. We've sent all of our industrial capability, all of our manufacturing capability overseas. We've outsourced it for cheaper labor, cheaper prices. We've given it to countries like China. Okay. So what does that do to us? Well, because we have the world reserve currency, we can do that temporarily. Okay. And why can the U.S. get away with running these massive trade deficits with countries like China, who basically export all of their goods to the U.S. and we pay massive fees in order to do that, right? We pay them tons of money to import. So what does the U.S. do? Because we're the world reserve currency, we don't need to send countries like China gold bars or assets in order to pay for our imports. The U.S. can pay for trade and do trade in U.S. dollars, right? It's the world reserve currency, so nations across the world use U.S. dollars to transact with each other. So there's value in that U.S. dollar. Why is there value there? Because the dollar's stable. The dollar is backed by our military, basically is what it's backed by, okay? So countries are comfortable in accepting U.S. dollars as a form of payment. Is China going to accept Venezuelan bolivars as payment? No, because it's a hyperinflated currency. Are they going to accept Argentinian dollars? No, because it's a hyperinflated currency. Countries aren't going to trade in currency that's weak, that depreciates incredibly quickly. This is why the US dollar is the world reserve currency. They're going to transact in US dollars because they know the country's stable, the economy's stable, the dollar will retain its value more than other currencies. That's the only reason we can use it. So China is willing to accept the US dollar. Well, now that they have hundreds of billions of US dollars that they're making every single year from doing trade, trillions at this point actually, now that they're getting all these US dollars, China is just like any other investor. They have a shit ton of cash that they know is going to depreciate over time. So are they just going to hold that cash, or are they going to do something with it to try to preserve that wealth? Well, they're going to preserve their wealth. So there's two things that they can do. One, they could either sell those US dollars and go buy a bunch of gold and hold their wealth in gold and get rid of their US dollars, or to the benefit of the US temporarily, they could buy T-bills or treasury bonds, basically sell their US dollars back to the US government in exchange for debt, in which they're going to earn an interest off of, a yield off of, and they're going to get their yield in US dollars, okay? So here's the issue with where the US is going right now. If the US loses its world reserve currency status, number one, less people are going to take US dollars for payment, which means we have to do what? Well, we have to give them gold. We have to give them something else. Well, if we don't have gold, if we don't have other assets, country goes bankrupt. We have no money. Or if a country like China decides, you know what, this US dollar, it's not as good as we thought it was. We don't like the US dollar. We're getting paid in interest in US dollars on our bonds, but the interest we're getting paid, which is USD, if that currency continues to inflate and get hyperinflated over the next 10, 15, 20 years, whatever the length of that bond is, the value of their interest or their yield also goes down. So if they no longer see the value in purchasing US debt and purchasing US dollars and getting paid interest in US dollars, they're going to stop buying those treasury bonds. And they're going to put their USD in what? Like I said, gold. Well, who are the biggest importers of gold in the world right now, ever since the 2008 financial crisis? BRICS, right? BRICS. Brazil, Russia, India, China, South Africa. They're all importing shit tons of gold. Why? Hedging against the fall of the US dollar as the reserve currency. So if China and these countries stop buying treasury bonds because they don't want to hold USD anymore, the US government is now no longer funded. We go bankrupt. World reserve currency status gone. Okay? So we either go bankrupt through treasury bills, treasury bonds, not getting purchased anymore because nobody wants a US debt, or nations start requiring forms of payment that are no longer USD. So they were going to require gold, silver, Bitcoin even is a thing that Russia is using right now with China, right? So these nations are going to start to move away from the USD. This is also why sanctions, Ponky, my man, I'll get to that. This is also why sanctions on Russia that the last administration had imposed were counterproductive, because these nations aren't just going to allow their economies to collapse because they can't trade in USD anymore. No, they're going to use other means, gold, or they were using crypto. Russia came out that Russia was using crypto to make payments to China and these other nations to be able to trade. So as more and more nations move away from the US dollar, that hurts America, okay? So we got to think, how much longer do we think we're going to be the world reserve currency? We have to plan for that. We have to think ahead and say, okay, if we lose that world reserve, right? Exactly. It pushed Russia closer to China. Exactly. We made allies out of people we didn't want to make allies out of. So if we lose that world reserve currency status, we need to understand, well, how do we hedge against that? What do we hold instead of USD in order to capture an appreciation of an asset that we move to, which is going to be gold and Bitcoin. Those are going to be the new world reserve currencies. It's going to be gold. It's going to be Bitcoin. Bitcoin is literally digital gold. That's all it is. It's just digital gold. Same shit. Even but with more of a capped supply. Only 21 million Bitcoin. You can continue to mine gold. So that's where we're at in our cycle as a world reserve currency. We're coming to the tail end of it, right? It's within our lifetimes, likely, if they're not major reforms. So I'm going through all this to make you understand that I'm thinking 10, 15 years down the road, whenever we make these investments, whenever we do these things inside of the Taylor's Code, I'm not thinking about tomorrow or a week from now or a month from now and just hoping to make all this money trading shitcoins. No, I'm thinking, okay, how do we outperform Bitcoin and gold in the short term? During bear markets, we rotate back into major assets. So we rotate back into Bitcoin and gold, and we take all the profits that we made off of altcoins, these beta plays, and we rotate them back into the majors so that we have more capital to own more majors, right?